Well, investors are seeing a lot of volatility in the financial markets. So what should investors be doing? The media can certainly confuse you. The media can frighten you. And the media can keep you, with a deer in a headlight look. How to manage your investments during a volatile market. That's our next topic of discussion. Of course, it could depend on where you are in your life cycle in terms of what your goals are in terms of your investments. Joining me at this time, as she often does, is certified financial planner and founder of Financial Labs, Laura Davis. Laura, good to have you with us again.
It's so good to be here, Rick, as always.
So, it depends, of course, on where you are in your investment goals and what age cycle you're in and so forth. But let's start with that general phrase, Laura, because a lot of people are concerned. They're confused. So how would you suggest to manage your investments during volatile market times?
As you said, Rick, this is a tough time. And no matter how old you are, and no matter what stage of your financial journey you're in, seeing those market downturns can feel really scary. What I've been liking to remind my clients recently is that regardless of the political climate, regardless of what's happening around the world, we always expect market corrections at some point. The market doesn't always just go straight up. That's just not how markets work. So even though we know that this current volatility has been triggered by a lot of what the current administration is doing, which can be very frustrating, it also isn't uncommon for us to have market swings and downturns. So I always like to reassure people that this is part of a normal market cycle, even though it may not seem like a normal market time.
That's a good point. I mean, the markets are always volatile. There's always ups and downs. Straight up, something's not realistic if it's straight up.
Yes.
And so keep your objectives in mind and your strategy in mind, big picture. Is what I'm taking away from what you're saying.
That's exactly what I'm saying. So I've been seeing a lot of posts on social media with people saying things like, I'm going to withdraw my 401k, or I'm going to liquidate everything that I have, or I'm going to put it under my mattress. And I can't give financial advice because your viewers are not my clients, but I can offer some education and a little perspective. When we're looking at our own investments, first of all, most of us measure what the market's doing by what the S&P 500 is doing, which is that largest bucket of U.S.-based stocks. And we are currently about where we were last July, so 9 months ago. So we've lost our gains from 9 months ago. So it isn't quite as terrible as you think right now. Now, does that mean that it doesn't have further to fall? I think we probably have a little further to fall, but I don't know because I have lost my crystal ball and I can't ever find it again. But what I would caution people to do is if you do feel like your allocation is off and not comfortable for you, so your mix between your stocks and bonds, you can always reduce that mix. What you probably don't want to do, unless you have a pressing need to spend the money now, is to liquidate your 401k and take it out from under that protective umbrella. Because remember, IRAs and 401ks are just an umbrella under which investments lie. And that umbrella is protecting them from taxation. So you don't want to pull them out because you'll get taxed. And if you're under 59 and a half, there'll be an additional penalty. But what you can do is underneath that umbrella, you don't have to be holding 100% in stock mutual funds. You could hold bonds. You can even hold cash. Almost every 401k has an option for a money market fund. So I would just caution you not to make rash decisions based on your feelings about what's happening today, even though it can feel very overwhelming.
Very timely, very important advice. I don't want to use the word advice, but commentary, Laura.
Not advice, Rick. Never that.
Right.
You signed an agreement with me.
not giving advice, giving commentary here.
Yes.
But very sound and very timely. And so, folks, you just heard it. We're in a time where is no like any other time in terms of the financial markets. They're always up and they're always down. Don't let the news cycle make you panic and make unwise decisions. Any final comment, Laura?
I just would prepare yourself mentally to watch your account values go down a little bit.
Yeah.
And if you don't need the money now, remember that year over year, the stock market has returned about 10% annually on average for the last 100 years. So we may be moving into a different kind of market cycle. But if you think about all those companies that you use on a daily basis, that your fellow Americans use on a daily basis, the only way that the stock market will disappear is if all those companies disappear. And I think that's pretty unlikely.
All right. And if someone's out there reinvesting dividends and interest and the market goes down, then they're dollar cost averaging.
Sure, of course. And if any of you are in your working years and you're still investing into your retirement plans through work on a monthly basis or bi-weekly basis, then you are taking advantage of these lower prices.
There you go. All right, Laura Davis, founder of Financial Labs. Thank you for joining us.
Thanks, Eric.